Hello, friends. September is about to bring three separate money-related developments into the same short window for older Americans. New Medicare plan and premium information for 2027. A September 15 federal tax checkpoint that can matter for retirees using the new senior deduction, and the final month of inflation data that will determine the next Social Security cost of living adjustment. One warning right at the start. This is not a new federal September bonus check. The dates and rules are real, but the money effect depends on the person, the plan, and the tax situation. That distinction is exactly why I track these updates here. If staying ahead of Social Security, Medicare, tax, and retirement rule changes matters in your household, hit subscribe to Dark Macro by Walter Berron. The goal is simple. See the rule before it becomes an expensive surprise. Change number one is Medicare, because September is when the 2027 numbers start becoming personal. CMS has already published one important national figure. The Medicare Part D base beneficiary premium for 2027 is $41.33. In 2026, it is $38.99. But that $41.33 figure is not a bill that every Part D enrollee will receive. It is a national base amount used in the formula for plan-specific premiums. Actual premiums can be higher or lower depending on the plan and location. Federal law also caps the annual increase in that national base beneficiary premium at 6% through 2029. CMS says the final 2027 Medicare Advantage and Part D landscape, including final average premium information and plan offerings, is scheduled for release in mid to late September. Then comes the document that matters at the kitchen table, the Annual Notice of Change, often called the ANOC. Medicare says plans send that notice in September. It shows what will change in January in coverage, costs, and other plan details. That means the number that matters most is not a national headline. It is the number printed in the specific plan's notice. There is another potentially positive piece inside the 2027 Medicare picture. CMS has negotiated prices for 15 additional high-cost Part D drugs, and those negotiated prices are scheduled to take effect January 1, 2027. The list includes drugs used for conditions such as diabetes, cancer, asthma, and other chronic illnesses. That does not mean every person taking one of those medicines will see the same dollar savings, because what a beneficiary pays can still depend on the plan, pharmacy, coverage rules, and the drug involved. But the negotiated prices are real federal program changes. For which, the timing matters because Medicare open enrollment runs from October 15 through December 7. A plan change made during that period generally takes effect January 1, so September is the preview month. October and November are the comparison months. January is when the new coverage begins. A concrete next step under the program is simple to describe without guessing at anyone's best plan. Medicare.gov provides official coverage information and plan comparison tools as new options become available. Medicare also lists 1-800-MEDICARE or 1-800-633-4227 for questions about coverage, claims, and costs. State health insurance assistance programs, known as SHIPs, also provide Medicare counseling. The important reporting point is this: the ANOC is not junk mail. It is the plan's official notice of what is changing. Change number two is the tax side. And this one is easy to misunderstand because a deduction is not the same thing as a check. For tax years 2025 through 2028, the IRS says people age 65 or older may qualify for an additional $6,000 federal deduction. For a married couple filing jointly, if both spouses qualify, the potential deduction is $12,000. It is in addition to the existing extra standard deduction for older taxpayers, and it can be available whether an eligible taxpayer itemizes or takes the standard deduction. There are income limits. The enhanced deduction begins to phase out when modified adjusted gross income exceeds $75,000 for an individual or $150,000 for a married couple filing jointly. The IRS also says an eligible person must be age 65 by the end of the tax year, have a valid Social Security number, and, if married, file jointly to claim the deduction. Now, why does this belong in a September money update? Because September 5th, 2026 is the third federal estimated tax payment date for individuals making 2026 estimated payments. Form 1040-S lists that date. For retirees receiving pensions or annuities, the IRS also updated the 2026 Form W-4P, the withholding certificate for periodic pension or annuity payments, to account for new federal income tax deductions that can create a real cash flow issue, but not a one-size-fits-all one. A $6,000 deduction does not mean a $6,000 tax refund. It means up to $6,000 of qualifying deduction can reduce taxable income before the tax calculation. The actual tax effect depends on income, filing status, phase-out rules, deductions, credits, and the amount already withheld or paid in estimated tax. For someone making estimated payments, the relevant official document is 2026 Form 1040-S. For someone receiving periodic pension or annuity income and reviewing withholding, the relevant document is 2026 Form W-4P. Publication 505 explains federal withholding and estimated tax rules. Aston, and there is an important caution in the IRS rules. Underpayment penalties can apply when too little tax is paid during the year. So the September opportunity here is not cut the payment because a video said so. The opportunity is that the 2026 calculation can reflect the deductions federal law actually allows. This is also where some of the biggest misinformation appears online. Claims that the new senior deduction automatically creates a $6,000 payment are not what the IRS rule says. It is a deduction from income for qualifying taxpayers, not a $6,000 federal check. And it does not mean that every Social Security beneficiary automatically owes zero federal income tax. The enhanced senior deduction and the taxation of Social Security benefits are separate parts of the tax calculation. Change number 3 is Social Security, and September is the month that completes the inflation data used for the next COLA. Social Security's COLA is based on the Consumer Price Index for urban wage earners and clerical workers, the CPI-W. The formula compares the average CPI-W for the third quarter, July, August, and September, with the third quarter average from the last year in which a COLA became effective. If there is an increase, the percentage is rounded to the nearest 1/10 of 1%. That makes September the final measuring month. As of now, there is no official 2027 Social Security COLA percentage. Any headline presenting a final number before the September CPI-W data is available is getting ahead of the federal formula. The Bureau of Labor Statistics is scheduled to release the August 2026 Consumer Price Index on September 11. The September 2026 CPI release is scheduled for October 14. Once that September figure is available, the 3-month third quarter data set is complete. There is one number already circulating that requires context. The 2026 Social Security Trustees Report uses a 2.7% COLA for calendar year 2026 under its intermediate assumptions. That COLA would be effective in December and payable in January 2027 if the actual inflation formula produced that figure. But 2.7% is an actuarial assumption in the Trustees Report. It is not the official 2027 COLA announcement. The final percentage still depends on the actual CPI-W calculation. Here is why even a few tenths of a percentage point matter. A COLA is applied to the benefit amount, so a person with a larger monthly benefit sees a larger dollar increase than someone with a smaller benefit. And for many people enrolled in Medicare Part B, the net amount that reaches the bank account can also be affected by the Part B premium deducted from Social Security. The Medicare Trustees Report currently estimates a standard monthly Part B premium of $209.50 for 2027. That is an estimate, not the final 2027 premium amount. The final figure will matter when comparing the gross Social Security COLA increase with what actually reaches a beneficiary after Medicare deductions. And one more clarification is important. September 2026 Social Security checks themselves do not contain a new 2027 COLA. SSI's official payment calendar shows the regular September schedule. C is scheduled for September 1. For people who received Social Security before May 1997, or who received both Social Security and C, Social Security is generally paid on September 3. For the birthday-based schedule, September payments fall on September 9 for birthdays from the 1st through the 10th, September 16 for birthdays from the 11th through the 20th, and September 23 for birthdays from the 21st through the 31st. So the Social Security money development starting in September is not a surprise bonus. It is the final data phase that sets up the next COLA. The practical official sources are SA.gov for COLA information and BELS.gov for the inflation releases. Social Security's national number is 1-800-772-1213 for questions about an individual record or payment. Let me bring all three together in the same order. First, Medicare. In mid to late September, CMS expects to release the finalized 2027 Medicare Advantage and Part D landscape and final average premium information. Plans send annual notices of change in September. The 2027 Part D base beneficiary premium is $41.33, but individual plan premiums vary, and 15 additional negotiated drug prices take effect January 1, 2027. Second, taxes. The enhanced senior deduction can be as much as $6,000 per qualifying person age 65 or older, or $12,000 when both spouses on an eligible joint return qualify, subject to income phase-outs and other rules. September 15 is the third 2026 estimated tax payment date, and the IRS has updated Form W-4P for pension and annuity withholding to account for new federal deductions. Third, Social Security. September completes the third quarter inflation measurement used to calculate the next COLA. The August CPI release comes September 11. The September CPI release is scheduled for October 14, and the official 2027 COLA is not final until the required data are available and Social Security completes the statutory calculation. That is the real good news in this September story. 3 separate federal money systems are entering a period where seniors can finally see more of the numbers that will shape 2027. But none of them is a universal cash bonus, and none produces the same result for every household. This report is general educational information about public programs and federal rules. It is not personalized financial, legal, or tax advice. Individual details can change the result, so the relevant agency or official program source is the place to confirm how a rule applies to a specific situation. If this kind of fact-checked update helps cut through the noise, subscribe to Dark Macro by Walter Berron and share this with someone who follows Social Security or Medicare. The next few weeks will bring more official numbers, and those numbers matter far more than the rumors.